Good morning, viewers. It's Monday morning, May 19, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please mention your email in the comment section so that we can forward you the daily market wrap in your inbox at exactly 7 a.m. Eastern Time each weekday. Wall Street's main indexes rose on Friday for their fifth straight day, buoyed by US-China tariff truce earlier in the week, even as economic survey data showed a deterioration in consumer sentiment. All three major indexes steadily added to gains from late morning, while investors took weak data in their stride. Investors have jumped back into risky assets, though some wariness has replaced those high spirits. Uncertainty over trade policy continues to dominate consumers' thinking about the economy as consumer sentiment came in at one of the lowest levels on record when a widely watched survey from the University of Michigan of consumers showed that consumer sentiment index has slumped further in May. The index came in at 50.8, its second lowest reading on record, down from 52.2 for April. Also, 1 year inflation expectations jumped from 6.5% last month to 7.8%, the highest since 1981. Other new data showed a weaker than expected rebound in housing starts. They rose 1.6% last month, while building permits fell by a steeper than feared 4.7%. After making progress on trade with the UK and China, the Trump administration appears to be running out of patience for striking case by case deals with the rest of the world. President Trump said on Friday his administration could not meet with 150 counterparties seeking deals. His administration can't negotiate deals with all partners at once due to limited capacity. Instead, he said the US will write to trading partners in the next 2 to 3 weeks, telling what they will be paying to do business in the United States. Markets took the comments in stride and rallied in the afternoon. At close, the Dow Jones Industrial Average rose 332 points, or 0.78% to 42,655. The S&P 500 gained 41 points, or 0.70%, 5,958, and the Nasdaq Composite advanced 99 points, or 0.52% to 19,211. All three major indexes boasted weekly gains for the week. The S&P 500 gained 5.3%, while the Nasdaq rose 7.2%, and the Dow added 3.4%. The S&P 500 has erased all its 2025 losses and is in positive territory for the year as an air of normality returns to the market. Among the S&P 500's 11 major industry indexes, most advanced with energy, the sole loser, down 0.18%. Biggest gainer was healthcare, which ended up 1.96% for the day after a volatile week. One of the biggest index point boosts was from United Health Group Incorporated, which regained ground, rising 6.4% on Friday and leading S&P 500 percentage gains after 8 straight days of steep losses. Investors were warily expecting strategic changes at the insurer after the Wall Street Journal reported it was under a criminal probe by the Justice Department. Among other individual stocks, Applied Materials shares slipped 5.3% after the provider of equipment for chip manufacturing missed estimates for second quarter revenue. Charter Communications shares rose 1.8% after the cable company said it would buy privately held rival Cox Communications for $21.9 billion. Shares in Verizon Communications rose 1.7% after the Federal Communications Commission said on Friday it was approving its $20 billion purchase of fiber optic internet provider Frontier Communications after the largest US telecom company agreed to end its diversity, equity, and inclusion programs. Soon after markets closed on Friday, Moody's ratings downgraded the US government's AAA credit rating, citing large financial deficits and rising interest costs. Investors were also left waiting for clarity on US tax policy as Trump's sweeping tax bill failed to clear a key procedural hurdle as hardline Republicans voted to oppose the bill despite Trump's call for unity in a rare political setback for the Republican president in Congress. Before the Moody's downgrade, Treasury yields declined for a second day to 4.437% after 10-year yields settled Thursday at 4.454%. My take: Moody's downgrade. What does it mean for us, the people? Today, we are diving into a major financial headline. Moody's, one of the top global credit rating agencies, has downgraded the credit rating of the United States government. What does that actually mean? And why should we care? Let's break it down into 5 sections clearly and simply. Section 1: What happened? Moody's has lowered the US long term credit rating from AAA to AA1. This means that, in their view, the US is no longer the world's most trustworthy borrower. It's worth noting this is the last of the 3 major credit agencies to issue a downgrade. Standard & Poor's did it in 2011, Fitch followed in 2023, and now Moody's has joined them. Section 2: Why did it happen? The downgrade wasn't random. Moody's listed 3 big concerns. First, persistently rising federal deficits. The US is spending more than it earns year after year. Second, political dysfunction. Ongoing fights over the debt ceiling and the threat of government shutdowns undermine confidence in fiscal governance. And 3, the cost of debt is rising fast. With higher interest rates, the government is paying more just to service its existing debt. Section 3: Why it matters. So, what are the consequences of this downgrade? Number 1, the US may face higher borrowing costs. Investors could demand higher interest on government bonds. Number 2, there is potential for market turbulence. A downgrade sends a signal to investors, and they often respond with caution or volatility. And number 3, it chips away at the US's global financial reputation. For decades, US Treasury bonds were considered the safest investment on earth. That perception is being challenged today. Section 4: Global ripple effects. Remember, US Treasuries are the benchmark for global finance. If their safety is questioned, it can cause global interest rates to shift, investors' behavior to change, and even impact currency markets, especially the US dollar. Section 5: What's next? So, what happens now? Moody's is watching closely. If the US doesn't take steps to improve its financial outlook, more action could follow. That means addressing both sides of the equation: revenue and spending, taxes and entitlements, debt and discipline. The challenge is as much political as it is financial. In summary, Moody's downgrade of the US government is not just a technical adjustment, it is a wake up call. It reminds us that no economy, not even the world's largest, is immune to financial mismanagement or political instability. Let us hope Washington listens. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about Money.